Namaskar, I Vishwaruparat welcome you all to Uday India Digital. Today I'll talk about Fitch Ratings downgrading US credit ratings and its global impact. As you all know, Fitch Ratings has downgraded the US credit ratings from AAA to AA+. The downgrade of the US credit ratings by the Fitch Ratings is a significant event that could have implications for both the US and global markets. Now, why I am talking about this rating about the US is a little bit interesting. But first let me tell you what impact this rating means for US and India. Impact on the US market. The downgrade could lead to higher interest rates in the US as investors demand a higher risk premium for holding US debt. This could make it more expensive for the US government to borrow money and could also lead to higher mortgage rates and other borrowing costs for the businesses and consumers. The downgrade could also make the US dollar less attractive as a reserve currency, as investors may be less confident in the US economy's ability to repay its debts. This could lead to a decline in the value of the dollar, which would make imports more expensive and could hurt US businesses that rely on exports. Impact on global markets. The downgrade of the US credit ratings could also have implications for the global markets. Investors may become more risk averse and shift their investments away from the US, which could lead to a decline in stock prices and other asset prices. This could have a negative impact on global economic growth. However, it is important to note that the downgrade of the US credit rating is not necessarily a sign that the US economy is in trouble. The downgrade reflects Fitch's concerns about the US government's fiscal outlook, but it does not mean that US government is likely to default on its debts. Impact on India. The downgrade of the US credit rating could have a number of potential impact on India, including increased volatility in the Indian stock market. The Indian stock market is closely linked to the US stock market, and a downgrade of the US credit rating could lead to increased volatility in the Indian stock market. This could make it more difficult for Indian businesses to raise capital and could also lead to a decline in the value of Indian rupee. Increased borrowing costs for Indian businesses and consumers. The downgrade of the US credit rating could lead to higher borrowing costs for Indian businesses and consumers. This is because investors may demand a higher risk for premium for holding Indian debt, as they may be less confident in India's ability to repay its debts. Reduced foreign investment in India. The downgrade of the US credit rating could also lead to reduced foreign investment in India. This is because investors may be less willing to invest in India if they are concerned about the country's economic outlook. Slowdown in India's economic growth. The downgrade of the US credit rating could lead to slowdown in India's economic growth. This is because the downgrade could lead to a decline in investment, consumption, and exports. You all have heard about UPI, the Unified Payments Interface system, launched by the National Payments Corporation of India in 2016, has emerged as a game changer in the Indian financial landscape. With its low-cost, instant and interoperable payment infrastructure, UPI has transformed the way Indians transact, paving the way for a cashless economy. However, what is even more surprising is how UPI has rattled America, a country known for its sophisticated financial system and dominant role in global finance. UPI's success story is quite impressive. In the last 5 years, the system has processed over 25 billion transactions worth more than $1.5 trillion with a growth rate of over 500%. It has become the backbone of India's digital payment ecosystem, accounting for more than 80% of the country's mobile payment volume. Moreover, UPI's success had led to a surge in the number of digital transactions in India, reducing cash dependence and improving financial inclusion. Despite Credit Suisse downgrading India's rating in 2022, the Indian economy has continued to grow and the UPI system has become a major player in the global payments market. There are a number of factors that have contributed to India's resilience in the face of the downgrade. These include the strength of India's domestic economy. India's economy is growing at a healthy pace, and the country has a large and growing middle class. This provides a strong base for continued growth. The government's focus on reforms. The Indian government has been focused on reforms that have made the economy more open and competitive. This has attracted foreign investment and helped to boost growth. The UPI system is now challenging the dominance of American payment systems such as Visa and MasterCard in India. In 2022, UPI processed more than $1 trillion in transactions and is expected to continue to grow in the years to come. The success of the UPI system is a testament to the innovation and resilience of the Indian economy. It shows that India is capable of overcoming challenges and emerging stronger. This was it for today. Stay tuned for more such news.